guys, and good morning. So this is a trade breakdown of the SP 500 trade that I took yesterday. I took it on Tuesday. Yesterday was Tuesday, the 16th of June 2026. So let's do a very quick breakdown of the trade and see how it came about. So in this video I will actually be talking a lot about SMT. So that will be my focus because SMT was the major signal, the major signal that gave me the it was the major signal, the major confluence that gave me the confidence to be in this trade for as long as I did. Okay, so we got over 380 pips, or maybe let's say 400 pips on this trade, this particular trade, and it was a very beautiful trade. Yes, so let's get into it. So as you can see here, I have the ES chart, which is the futures chart, and then we have the NQ chart. So let's just put NQ on this side or ES on this side. So we have NQ on this side because I usually use the futures charts to do my analysis for US 100 and 500 because they are more accurate and they move better. So when I came to the futures chart, I noticed that we had already taken out the all-time high, which was my target on Monday. If you are in my group, you know that my target was the all-time high on these two assets, on NQ and ES, Nasdaq and SP 500. So we had already done that. We had swept the all-time high on both of these assets. So what I did is that because this is a very uh, important level, this is a key level. Old highs, old lows, all-time highs, all-time lows, those are very key levels that we can get a nice reversal from. So I observed that, and when we came to the 4-hour chart, I noticed that price had done something very interesting. Okay, so now this is where SMT came in. You can see that we had Monday's high that had formed at 10 a.m. and then yesterday on Tuesday at 6 a.m., which is just close to the um, New York Kill Zone open, we had this higher high form on Nasdaq. Okay, so that becomes a sweep of liquidity, another sweep. So remember, we have the first liquidity sweep, all-time high. So this was an all-time high. I think I have a template for ATH. I don't. Okay, so we have all-time high right there. Let's just mark it as sorry about that. PDH, and then yes, I just wanted to edit this ATH. So that was the ATH, it had been swept. So after that, on the 4-hour, I noticed that we have something very interesting. So we had this liquidity sweep, the previous day high sweep. So Monday's high was swept on Nasdaq, and then on SP 500, the previous day high was left open on the 4-hour chart. Okay, so this is what I noticed when we came into the New York session. Okay, so you can see this is 10 a.m. and then we have Monday's high left open on that high, on that piece of price action. Okay, so that becomes an SMT. So immediately you see an SMT, you already start to know that price is uh price is willing to go to the downside. Okay, so this becomes a bearish SMT. So a bearish SMT is where we have, I'm sorry, so this is an all-time high. So let me just mark this and then we can do it. I want this video to be very short. Okay, so this is an SMT, a bearish SMT. So what does a bearish SMT means? A bearish SMT means that we have two correlated assets. So on one asset, we have this form, we have a higher high, okay, and then on the other asset, we have a lower high being formed. So we have the original high, and then that high is not taken out, and then price drops to the downside. Okay, so these are the characteristics, and you can see that in both we take out this intermediate low. Okay, so this becomes a market structure shift that forms right there. Okay, so we form a market structure shift right there, and then price is supposed to come back to this level and then drop to the downside. Okay, so this is an MSS, this is an MSS, and then now what you expect to get is something of this sort as price drops to the downside, and that is exactly what happened yesterday. Okay, so this is basically what an SMT is. You form a higher high right here and then a lower high on the other asset. So you are supposed to trade this asset because it's giving you more bearish price action. You can see it's the one that is not willing to break its own high, so it will be the safer one to take trades on and go and adding entries as you go lower. So that basically is what SMT is, and that is exactly what we saw yesterday. As you can see, we got a lower high on SP 500, we got a higher high on Nasdaq. Okay, so when I saw that happen, now I went back to US 100 and US 500, because remember, in Kenya we are not able to trade the futures. So I came to the CFDs, and we had the same thing. Although we have not taken out the all-time highs, we had taken out this important buy side liquidity. So uh, I marked that sweep because that is a very important sweep. So let's use the 4-hour chart. That is a buy side liquidity sweep. So remember, you need to see you need to have a checklist before you take a trade. For example, you need a liquidity sweep or a key level tapped into, and then maybe add an SMT, and then your entry model should play out. All of these should play out within some specific time. Okay, so this is the buy side liquidity being swept, and then we are also tapping into a key level. What is the key level here? It is a for our order block, and even on a daily it's supposed to be a daily order block. So this is a daily order block because this is the last up close candle in this piece of price action. So we are tapping into a key order block, so price should be dropping to the downside. Even if it's not permanently, we should see some reaction from that level. So come back to the 4-hour. I mark the buy side liquidity, and then now I mark my SMT, which is also a liquidity sweep at the same time. So sure, sorry about that. This is an SMT, and then now I come to US 500. I like Nasdaq on that side. US 500, we do the same thing. So let me just delete that. We will mark it once again. That is just my analysis for today's price action. So you can see that we had the same liquidity sweep right here. So we have swept buy side liquidity, BSL, BSL, BSL. We have swept buy side, then wicked into that zone, and then retraced back lower. We have formed a lower high while we have formed a higher high on the other asset, so that becomes a bearish SMT. So when that happens, now you want to see price give you a change in state of delivery according to my entry. So now I was just waiting for a change in state of delivery on a 1-hour chart. Okay, so remember, all of this is happening during the London session. The London session, we kind of accumulated, manipulated to the upside, and then now we had this last up close candle form at 7 a.m. And then what is 7 a.m.? 7 a.m. as usual is the New York kill zone open. Okay, so it is a very crucial time. So this is the last up close candle, and what does it give us? A last up close candle, and that is what gave us a 1-hour change in state of delivery. You can see how the level was important, because after that close you can notice that there was no candle close above that. Again there was no candle close above this level. Okay, so that would have been my invalidation level. So as soon as this happened, we got this at 8 a.m. So remember, between 8 and 9 a.m. we have the 8:30 open, so of course it's a very crucial time to observe. And then we got this candle, so this is where I entered the trade. And there is something that I should have mentioned when I was teaching you about the, let me just mention it quick. Where did we draw we did some drawings here. So this is known as a protected high. Okay, so elements of an SMT. Okay, so this is known as an this is known as a protected high. Okay, so when you have a protected high, this is known as a high, protected high. Okay, and with a protected high, what you want to do is when you enter that trade, because as I have said, you expect price to retrace back higher, because in most cases you will have a fair value gap between this point and this point, so or maybe an order block. So as price is going back to the upside, you want to enter that trade somewhere there. So for example, if you can enter that trade, for example, right here, your short position, if you enter your short position right here, your first stop loss should be here, because this is the protected high. Why? Because price has refused to take it out, thus forming the SMT. Okay, so what you do, let me just mark this so that it does not confuse us. This is an SMT. So the high that was not taken is a protected high. So you do not put your stop loss above this. You put your stop loss above the original high that was not swept on uh, the weaker asset in terms of bullishness, or the stronger asset in terms of being bearish. So that is where you put your first stop loss. And then as price goes lower, for example, you will have something like this happening to this price action, which is what happened yesterday. We'll have price going back to this level around here. Then when you can break here, then retest and then break again, so you have this level being broken where price retraced from. So as soon as price breaks from this level, soon as price breaks from this level, now you can move this stop loss. You can add positions here as price is closing below this. If price can close above this level, this intermediate low, now you can move your stop loss lower to this high. This should be an intraday high in any situation. And then now you can add a position here and then continue with the trade to the downside. So I will show you how this played out exactly on yesterday's price action. So let's go back to our chart. So going back to the 1 hour, as I've explained, now this is our 1 hour change in state of delivery. And remember, we are in the New York kill zone, so and we did not have any news, so I was not waiting for anything else. As soon as we got that 1 hour change in state of delivery on both assets, you can see we got the same thing. Is the last up close and then a change in state of delivery to the downside. Soon as I got that, I took my first entries here. Okay, so I took that entry there, placed this, then my target was this. No. My target was, yes, that was my target. You can see that these bodies, they have some sort of equal closing range. So that is what I wanted to target. This was a very clean sell side liquidity to target. So that was my target, the sell side liquidity. And you can see the original stop loss gave me a 1.4, a 1.4, around 1.5, 1.6, 1.5 RR. Okay, so as price was breaking this area, so as I have explained, as price is breaking below this zone, you can see we have now at 10 a.m., exactly 10 a.m., we got this close below this area. Okay, so as soon as that happened, now I was more confident to reducing my stop to that level, 75.75, and then I added entries immediately on that level. As soon as that candle closed, I added entries and moved my stop loss lower. Okay, so at this point I had not taken partial, because my first partial I wanted to take it on this order block. You can see this is a propulsion block actually. So that is where I wanted to take that the first partials at 75.30, between 75.33 before it weaks into the body. So that was my area of first partials. Okay, so you can see as soon as I added that entry and I moved my stop loss, what does the RR become? It becomes a very good RR of 2.7 R. So you have moved from a 1.61 R to a 2 point, almost 2.8, 2.7 RR trade. Okay, and also you have added onto that position as soon as price has closed below these lows, because what does that tell you? This becomes a very good break of structure. So you just expect a retracement, and then price will drop to the downside to attack this uh, sell side liquidity. So maybe I should go to the 5 minute and explain how I did it. So yes, soon as price closed there, I added position, we got a retracement to the downside, and then you can see how price broke, uh, dropped to the downside. Okay, so yeah, basically that was the trade, and you can see this is the exact structure that I have explained on let me just open it on a separate, on ES. This is the structure that I have explained. Okay, so look at this. We have SMT. Okay, the high, the lower high. Okay, the high, the lower high, and then a displacement to the downside. The lower, the high, the lower high, displacement to the downside, and then we get this small retracement back to the upside. And that is what I explained. This is it, as you can see. This is that retracement. And as soon as price is breaking that low, this one here, right here, that is when you add position. And that is what I have explained right here. As soon as price was breaking here, right here, that is when I added position, and we added the positions with my VIP. And yeah, so that was the trade, and it was a very good trade. So basically that is SMT, and that is how I use it to make my trading better. And maybe, yeah, you need to learn SMT. So if you have any questions, my DM is open, my comments are open. Make sure you engage. Thank you for watching the video. See you on the next one. Peace.